GM. What a GM it is. Wednesday, 14th of February, Valentine's Day. What a lovely little gift from my lover, BTC. Thank you, Bitcoin. So, Bitcoin is behaving like a good partner. Yesterday's dip, driven by CPI, FUD, and nonsense. I talked about this yesterday during the dump, that it's a perfect shakeout. Not because I knew for sure it was going to go up, but momentum here, this is the key thing to remember. Whenever Bitcoin has this type of momentum, it is stronger than any dip, like any data, especially when the inflation data came in lower. It wasn't as low as expectations, but it actually was reduced month over month, the yearly, right? So the headline yearly CPI 3.1. It was 3.4 last month. So it's coming down. But because people expected it to come down more, they're all freaking out. Anyway, that all that shit there I just said is just splitting hairs. Remember in the macro outlook, the 2024, which is on the Learning Center, I said that the only thing that matters is liquidity. And then the things that can affect liquidity, which are Fed policy, mostly to do with quantitative tightening. Interest rates matter as well, but that's kind of a longer term thing. And so the market yesterday kind of just freaked out because people's expectations of rate cuts were, again, getting readjusted. But it doesn't really matter. It honestly doesn't matter. And not for us. Like, again, the people who are still thinking that there's a strong correlation between stocks and crypto are going to just get hammered. There hasn't been since FTX collapse. And in reality, there hasn't been a really strong correlation since mid 2021. When the bull market ended, mid to late 2021, when the bull market ended, the correlation really dropped off. 2022, everything went down, right? So you could argue there's a correlation from that perspective, but Bitcoin and the S&P didn't go down in lockstep. Bitcoin was in a big liquidation all year. But since the bottom, and I talked about this back at the time, one of the biggest drivers of the correlation between the S&P and Bitcoin was Alameda Research themselves with all their trading they were doing. And once that initial part broke, there's a bunch of TradFi managers and TradFi traders who were in crypto last cycle, right? Tourists. They were in all of this when crypto was going up and going crazy and there was free money floating around. And then as we started to go down, they left. And then towards the end, when Luna collapsed, FTX, 3AC collapsed, Celsius collapsed, and then when FTX collapsed over here, they just left. Everyone from hedge funds to market makers to prop shops, the Wall Street guys, they just disappeared, right? The TradFi, they left. And we were left with just crypto natives. And TradFi haven't come back in until here, until the ETF hype got going. So all of this was just crypto, basically crypto OGs, people who stuck around, people like us, who trade crypto, who are involved in crypto, who believe in crypto, believe in Bitcoin. We all stuck around. And so this whole part here is where the dislocation became even more apparent. Like, this is where there was practically no correlation between Bitcoin and stocks. There was a strong correlation between Bitcoin and gold at this point, as the gold narrative and the defensive asset and store of value and all that came more and more apparent with the banking crisis last year. But right now, as we go back into the current day, we don't have a strong correlation to stocks. Obviously, there's a caveat for that. Obviously, if crypto is strong and stocks are strong and the markets in general are rising and it's a risk on environment, broadly, that's still good for crypto, of course. Like, don't get me wrong, if the stock market went into a brutal bear market all of a sudden and crashed 30 or 40%, it's going to take crypto down with it. But Bitcoin is not a stock. I argue, and I think that the history bears this out, that the other crypto coins are more like stocks because they're risky investments, like they're speculative investments. There are people all over the world who buy Bitcoin because they believe it's the future of sovereign money, meaning you're getting inflated out of existence, sorry, by debasement of your currency, and Bitcoin's the only escape for the average person. Gold is fucking bullshit. The average person can't buy gold because they can't store gold. Certainly not enough to have any kind of decent net worth. And getting actual gold, right? Real gold. You're not getting scammed where it's filled with tungsten. And there's just a million problems with gold for the average person. It's fine if you're a government and you've got it locked up in a fucking vault, which, again, the funny thing about that is they say all this gold is in like Fort Knox and gold is in vaults and stuff. Says who? You know that US's gold reserves have never been audited. Never. I think it's been more than 50 years. Fort Knox has never been audited. So no one has ever gone in there and done an independent audit, third party, and said, yes, you have all the gold you say you have. So it's just more of this centralized bullshit. Trust us, because we're the government. Who the fuck's going to audit the government? No one. This is why they keep losing trillions of dollars. And the Pentagon fails its fucking reviews or its audits or whatever, like every year, and just everyone forgets about it. And they lose $2 trillion the day before 9/11. And like all this bullshit. People can see through this. So it's funny when people say that Bitcoin's only value is like belief or trust or what people think it's worth. Excuse me? What about gold? You don't even know if they have the gold that they tell you they have. You have no idea. You can't go to Fort Knox. You can't go to Switzerland, where most of the gold is. No, it's just fucking hilarious. Where you actually can verify Bitcoin. It's an immutable blockchain. You can verify everything on chain. If it's there, it's there. If it's not, it's not. Which is funny. The problems arise where you give your Bitcoin to centralized entities, right? And that's why, like with the ETFs, there's this push now for transparency around it, which they're all going to do because it becomes like game theory. I think Bitwise are the first where they're going to do proof of reserves. Excuse me. Matrix attack. Bitwise have posted up a wallet address where you can see the Bitcoin they have in their trust. And everyone else will eventually do the same because that's a big marketing angle. Bitwise can then say, yeah, I know BlackRock are big, but do you want to go with BlackRock? They don't prove the reserves. Here's our reserves. You can see we really have it. And BlackRock and all will eventually do it. There's no funny business going on, in my opinion. Not with the actual buying and accumulating. And then that brings on to the next point, the fucking another 500 million. This is crazy. This is insane. Like, we're now a month on, which is about almost 3 trading weeks, including the couple of holidays in between. Like 3 full trading weeks since the ETFs launched. And there's 500 million of inflows. That's crazy. Like, that's huge. And when you think about it, it's really, that was 10,000, yeah, like 10,000 BTC coming in yesterday. For like a comparison, every day there's only 900 BTC, new BTC mined. And in April, that drops to 450 because of the halving. And there's 10,000 currently at the run rate. There's 10,000 coming out. Not every day. Some days are 100 mil, some are 2. I would say there's probably 5,000 Bitcoin. Let's call it 250 at the moment on average. What we can actually see here, that the total, including Grayscale, since the start was what? 693,000. So let me do some quick maths. 693,000. And many trading days, many exact trading days have we had from the 10th? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 22, 3, 4. 24 trading days so far. That's an average of 28,000 per day. And that's that's including grayscale. Sorry, I've got that completely wrong. Excluding grayscale, excuse me. 227 divided by 24. Yeah, that's an average of 9,500. You have to exclude grayscale because grayscale had a bunch of Bitcoin already in their trust. That's not new inflows. The new the 9 new issuers, excluding grayscale, are taking in 9,400 per day. That's nearly, well, at current prices, it is at 51k. That is another 500 million every day. That's fucking insane. That's insane. You're talking like in a matter of weeks, they've accumulated more than Michael Saylor, right? So the 9 of them have 227 already. Michael Saylor, who's been buying Bitcoin for MicroStrategy for 4 years since 2020, 3.5, 4 years, they've got 190,000. The 9 ETFs have already 227,000. So in a month, they've overtaken them. And it's not like they're going to stop. This is what we mean when we say, like, I talked about it last year, and this was before ETFs. At the start of last year, I talked about how Bitcoin, just because it's programmed this way, there's eventually a massive supply squeeze because there's just not enough Bitcoin for even a modest amount of demand. But then adding the ETFs on top is like fuel on the fire. Crazy. And that's what I was saying here, like ETF buyers. Do you think they were scared about CPI? No. Buy the dip. Perfect dip to buy. Just get more. Because the ETFs, a lot of people think that the bears were telling you that the ETF launching was bearish and sell the news because it was the exit liquidity, chance to dump. We had the sell-off, which is natural. There's going to be some sellers. But for ETF issuers and the marketing teams behind them, right, and their advisors who are going out and selling this to all their clients, when you look at it, it's all an accumulation before all-time high. Because the expectation of everyone, from us to TradFi to Wall Street, everyone, is that Bitcoin goes to all-time high. Let's call it 70 or 80 or 90 or 100 or whatever. So anything below all-time high for them is just good accumulation. And you can see that now in the price. So the big thing is where we're going next and the kind of ranges that we're trading in. We've got too many alerts there. But this old chart here, the old, where are we on the daily? I was talking about this the other day, where we could have a upward sloping accumulation. I think you can see it on the 4 hour like this. I'm saying we could just grind up, grind up, grind up, grind up, and then have a flush back to the pivot. That's where I'm watching, but I'll talk about that in trade of the day. That's where I'm watching. And outside of that, when you go out, we're now outside that range. We're now in a new range. So above that 48k pivot, which was the biggest area for the market to get through, right? Bitcoin spent a lot of time between kind of 30 and 40. And then it spent, when it lost 48k and tested it and dropped off, that was where the bear market really kicked in. Above this, there's really nothing until all-time high. It doesn't mean we go straight there. Obviously, in between, there's going to be areas where the market wants to sell off. The first one is 58, which is, the reason for that is because that was, to me, that was the true top. And when I say the true top, what it means is this is where Bitcoin had its blow off top phase, where it was just up, 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 fucking FOMO, 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 FOMO. Then we had the first sell off. And as we know now, that went into a Wyckoff distribution, which meant that the next push wasn't like an impulsive bull market breakout. It was a false breakout. And then the next push was a false breakout, and then a lower high bounce, and then a sell off. This was like the peak of genuine bullish buying. And then we went into distribution. So 58, I see a lot of people talking about 58, and I fully agree. 58 is a level to watch. and then all-time high. And so looking at that from here, I see Bitcoin as being between 48 and 58, unless something major happens where it loses 48, then we go back into the range below. But I think Bitcoin now is going to trade between those two levels. And after that, we want to look at alts. So look at ETH BTC first. ETH BTC getting smacked down a bit again towards the end of yesterday's session and getting into this morning's. Again, probably just broadly grind sideways. Solana looking really strong here. When you look at Sol BTC, Solana Bitcoin is still doing well, right? It's keeping pace with Bitcoin, whereas ETH Bitcoin is dropping off. So Bitcoin's still the strongest. You can see this. Solana's USD chart is pushing up, but it's against Bitcoin. Bitcoin's still beating it. ETH USD, obviously, the dollar charts of all of these are pushing up. ETH USD is breaking out from its previous highs and looks good and looks strong and should have some kind of continuation. But Bitcoin's still the strongest. Make no mistake. And then we've got total 3, total altcoin cap, which is still below the highs, which is good. We're still in this recovery year that I've talked about, a recovery phase, where we have to go all the way up to 878 just to retrace 2022's bear market. So there's loads of room for price to go up. There's also plenty of time for price to, do fake breakouts or sideways, or this here, like if we blasted off all the way to here, could it have a big crash back? Possibly. That would require Bitcoin to have a big correction. I didn't draw this path to be accurate by price. I was just showing how if we're going here, it can still go up and all the way back down and still make it there. I don't think that will happen. I think that the weekly bands are going to keep holding here, where if we just take off all the drawings and just look at the bands, this weekly trend, to me, is going to hold because it has held. Talked about this a couple of weeks ago. Support is support until it's not. Remember when we had this sell-off at the start of January? Then we retested it. And then it was here. I said, we'll probably go back, retest these lows. But until all this breaks, there's no need to panic. It's setting a base, and it set the base, and it's now pushing up. Now, also going up into resistance. While Bitcoin's above resistance, that's good. So when you have Bitcoin above clear new highs, and alts are still at resistance, that means Bitcoin's leading. That's good. Bitcoin dominance continues to be strong. And I think the same thing, as we just kick into overdrive here with Bitcoin FOMO, I would expect Bitcoin dominance to continue rising. And the real time for alts is probably going to come after that. Right? Bitcoin just tends to suck all the air out of the room whenever it's having its run. And maybe we'll see more of a balanced market, right, where alts rise along with Bitcoin, especially if new money's coming in, and you can kind of gauge the new money by the stablecoin chart, which again just keeps going up. And you want to look at that on a weekly, and still just grinding up. So new money keeps coming in, flowing in. So if that continues, then you can see everything rise. But, especially with the move we just had, retracing that whole dump, Bitcoin's in the lead. It will continue to be in the lead, in my opinion. Bitcoin's still the best. AI is second best. And Sol and ETH, they'll be battling out for their own runs. Sol's obviously stronger at the moment. If you look at Sol ETH itself, Sol ETH is much stronger and holding up in its consolidation after a nice run. But a few weeks ago, I said Solana Bitcoin and Solana itself needs to just go sideways. And the same thing's here, right? Sol ETH can push all the way up, but still not be trending again. Sol BTC, even though the USD chart of Sol looks great, Sol BTC is still way off the highs. So consolidation for Sol against the majors is bullish. If Sol keeps holding strength against Bitcoin and against ETH without breaking out, it means it's building up for a bigger run. And that means that even when the Sol dollar chart is going up, it might need to sweep the highs, come back a bit, or just chop a little bit longer. Any of that, that's all fine. It might just keep ripping, for sure. Momentum's a powerful thing. But for me, when the Bitcoin charts look like that, BTC is still the leader. And I think that will continue. So That's what I'm looking at this morning. All looks good. Just keep all that noise of macro out of your head. When Bitcoin has momentum, it's going to go in one direction. Spot is where you want to be, right? Because unless you're adding trades on top, buying dips and stuff like that, which you can totally do, the main way to benefit from this Bitcoin run is to understand that the spot market is just going to keep accumulating. I said a couple of days ago that 50K wasn't resistance because why would anyone sell at 50K? We saw this play out perfectly yesterday because Bitcoin had a quick sell-off. That was not spot driven. You can check the market. There was minimal spot selling. What it was is Bitcoin got to 50, seemingly bad CPI print came out, and leverage got liquidated. You saw it, like it was liquidations, it was open interest dropping, it was futures led selling, and then spot bought that, held it up, and away we go. And you're going to see that all the way. You're going to see spot strong, leading. Then futures will get too aggressive. People will get too leverage long into these pumps. You'll have another dip and a flush. And don't get me wrong, we can go sideways, and there's probably some kind of cool off needed relatively soon because we're so far above the daily bands that they'll need to catch up. So I'd say maybe we continue pushing for a day or two. Maybe we hit 52, 53. We might see some sideways. We might see then a pullback. What you want to be watching is this is a really strong trend. You want to be watching the next time Bitcoin hits the daily EMA bands. That's where I'd expect to see BTC, finding some real strong support. Like here, stays above the bands for ages, flushes into them. If the bands keep holding, then expect to see Bitcoin continue its strong trending directional nature. So that's it. GM. See you all later, 5 p.m. UTC.